Hey everybody, Boris Hasselbeck. Welcome to the crosses part of January 2nd to January 6th, 2017. The crosses as we enter the new year really represent some very interesting opportunities for relative strength, relative weakness trades. And one of my more interesting ideas, I think, is the pound CAD, which has been a very, very quiet trade for the last several weeks, but it looks like it's ready to break. I think one of the more interesting things about, by the way, of the crosses trades this week is that they're really going to be breakout trades. I'm going to share a couple of ideas with you, and I'll show you on the charts exactly what I mean. But every one of these ideas really is a breakout or breakdown trade that really puts the trade into play once it hits a certain area. So with pound CAD, for example, this 165 is a very key support, and breaking it to the downside really opens up a pretty strong avalanche of sell-off in this particular pair. And we like the pound negative on the fundamental side. We like the CAD a little bit more positive on the upside. And as I said, CAD has shown itself to be, on a relative strength basis, the better trade on the commodity sector. Euro pound is interesting because, of course, the euro, that pair has corrected properly after a very, very large run-up. Found support again at the 83 level, but now faces this very big resistance at the 86. And this is going to be a very key test here too. It's really going to be a key test of also pound weakness, because if the pound is too weak, let me get back to this. If the pound is too weak to hold the 86 barrier, that really would suggest that we could see $1.20 pound dollar very, very soon. And a break of the 86 really opens up a nice big run towards 88s in the euro pound. And the last pairing that is interesting, it's sort of been very quiet but stealthily selling off, is the Aussie Kiwi. This is the relative strength bet on the Kiwi, sort of the soft commodity doing better than the hard commodity. Australia certainly going to be suffering more from any kind of a slowdown in China than New Zealand will. And it's becoming quite evident that we're again trying to make that run back down towards parity. Let's take a look at the charts here, and I'll show you exactly why I found this kind of interesting. So first and foremost, I actually Aussie Kiwi is very interesting, but I want to get to pound CAD first. Let's do this chronologically. So pound CAD, if you look at the pound CAD chart here, it's essentially a 65-67 consolidation since the beginning of the month. But we are probing the lower end of this range. And if this lower end breaks to the downside, if we break below the 65s, it really opens up a run towards the 63-61. There's literally no significant support to the 61-59 area technically. And certainly when you look at it in a longer term chart, you have a series of lower highs, a break to the downside. So fresh downside momentum by the break of the 165 really presents, I think, an interesting opportunity here in the pound CAD trade as we go forward. Euro pound is a sort of a standard, more conventional trade here. We've made the requisite triple actually bottom, not even a double bottom, but a requisite triple bottom of the 83. Tested it quite well, once, twice, 3 times, 4 times over here, making a higher low over here. But we're coming up against this very, very key resist at the 86, and only a break of the 86 puts us really in a much stronger forward momentum in the euro pound trade. The euro pound trade has been sort of a very big distributive trade here over the last 12 months, or the last 6 months, I'm sorry, and this 86 now becomes a very, very key level. As I said, this is actually going to be, in some ways, a key tell of just how weak the pound is if it can't hold the 86s after coming back against the euro for so long. And then last but not least, let's take a look at the Aussie Kiwi, because that is a sort of a stealthy downtrend. A lot of people have just not been paying a lot of attention to, but it's a really strong, very efficient downtrend. You have a series of lower highs. You have basically a downward trend channel. We're stopping dead right here, stopping right dead at the 103.50. That's been support more than once, twice, 3 times in the market. And this is going to be very, very key. A break of the 103.50 really opens up this, first of all, the 102.50 test. But if we go back out onto the weeklies, you can really see that it really opens up this possibility towards a full run towards parity. Now, we failed parity at the beginning of 2015 at 101, and then had a big rally back up towards the 113s. This time, I think it's a much more definitive sell-off. It's not sort of a sharp, panicky sell-off that we had earlier. This one is a much more fundamental sell-off because I think it shows a longer-term secular trend towards New Zealand, away from Australia, as Australia gets all the negative aspects of the Chinese slowdown. And that could mean that a break here below the 103 level, 103.50, really opens up the full-on run towards parity as we go forward. So I like this 103.50 break. I've been watching that very, very carefully in the Aussie Kiwi. I like the pound break at the 165s. And the euro pound is going to be sort of a telltale sign for us just how weak pound is as the week progresses. Kind of interesting setups as the week starts away from the major themes that could have some potential profit possibilities for us. Wish you guys the best luck, the best of trading. Boris Schlossberg, Happy New Year to everybody, and I'll see you guys next week.